your operations partially or fully suspended due to COVID?
Most companies, yes.
And then what they can get is up to $5,000 per employee for every employee they have. Here's the great part. Even a small fast food chain, if they only work their employees 10, 14 hours a week, are going to pay their employees $10,000 by the end of the year. And it's a payroll tax credit. You know what that means? It means you don't have a loan payment at the end of this. It means you don't have to defer your payroll taxes and have this big catch up later on. It doesn't mean you don't have to rob Peter to pay Paul just to do this. We're calling this COVID ERC. Now, before anybody hops on Google, you're probably not going to find COVID ERC because it's a terminology we've adopted in-house, and you'll see why in a moment. There are so many names for this, including ERC and ERTC and ETC and all these different things, and we really wanted to be clear about the programs we're talking about. So we're calling this internally COVID ERC. It's the COVID Employee Retention Credit. But the other reason we wanted to call it COVID ERC, this was actually adopted out of an older program. A lot of people think this is brand new in the CARES Act, but it's not. Employee retention tax credits have been around for a long time. In fact, you may remember way back to Hurricane Katrina, all these different aspects of it. They were just under different names. In its generalist form, what is an ERC?
When you go backwards and you look at what the basis for the employee retention tax credit has always been, it's been a tax credit for businesses located in disaster areas. It's a federal income tax credit, and it's kind of always pretty much followed this same basic as far as how much they could qualify for. There's been small variations throughout the years, but pretty much most of them have felt the same. But pretty much it's a 40% of the first $6,000. So what you're talking about is about a $2,400 credit for every eligible employee. But the interesting thing about these employee retention tax credits for disaster areas is during the disaster, every single employee that was there and working qualified. Very few limitations on how many they can. There's not a lot of ways to disqualify an employee.
I want to look at that for just a second because there's something you said I want to make sure that we don't skip over. With COVID ERC, it's about the employees that you have right now or will have in 2020. Here's the great part about this, and I'll talk more about it in a minute. Kendra, it's about the employees you had when the disaster took place.
Right.
And because we just came out of the largest economic span in U.S. history, most people were at their max payrolls that we've ever seen.
Right. And for the purposes of what we're looking at, the employee retention tax credit is going to be looking at very specific states with disaster areas, limited to 2018 and 2019. That's what's active right now for this previous or older version of the employee retention tax credit.
Now, the reason we're talking about this right now is because as part of everything that's been going on, Congress has enacted 28 new areas as disaster zones. And so we'll look at those now. And when I say areas, they've added counties, different areas of the state and things like that. In Alabama, Alaska, Arkansas, California, Florida, Georgia, Hawaii, Indiana, Iowa, Mississippi, Missouri, Nebraska, North Carolina, Ohio, we should split this list up.
Oklahoma, South Carolina, South Dakota, Texas, or Wisconsin. Then you have clients that qualify for disaster ERC. And no, not because it's 2018-19, is it past, is it old, do they not qualify? No, these are open tax credits for companies that were located in these areas for that time frame. And the interesting point is we did a lot of research on this. We've talked to a lot of experts, and it doesn't even matter if the company isn't currently open. Like the business owner, if it's like a flow through, they can actually still get this tax credit and apply it against. So basically they're going back to the numbers of employees they had during the time of the disaster, and they can take this disaster ERC right now.
Yeah. So let's look at these two services side by side. This COVID ERC is the reason that it was birthed out of this is because the entire country is a disaster zone. I hope you understand that. and see where this came out of. But basically, it's the same criteria, but the difference is COVID ERC is $5,000 per employee. But I'm just going to read it. A bill was introduced in the House last week to increase ERC, he's referring to COVID ERC, max compensation to $15,000 and credit percentage to $8,000.
80%.
Or 80%, thank you. And so what that'll mean, all our calculations that we're going to today are 50% of $10,000, in other words, $5,000. With this, Kendra, this will drive this credit up.
$12,000.
So we'll go from $5,000 to $12,000. So we're excited.
Keep in mind that's only something that's been introduced. It hasn't been voted on or anything like that, and that's why I didn't include it, because we can jump ahead a little bit there.
Now, okay, by the way, it's a payroll tax credit. Very important. Disaster ERC. Operations fully or partially suspended. Here's a great part. I'm going to ask you a question, Kendra. Kendra, during the hurricane of whatever, during the tornado, was your business closed at all, like even for an hour?
Yeah, we were closed for 2 days.
Oh, okay. Great. You qualify.
Mm-hmm.
So, or you pre-qualify for us to look. And with this, here's the great part. $2,400 for every employee that you had back then. So let's go through some questions. So, Kendra, you're that same restaurant that we looked at before. And remember, if I said, well, how many employees do you have right now?
2.
Okay. Sometime in 2020, how many do you hope to have?
10.
Okay. How many did you have back in, say, 2018 when this happened?
30.
Okay. That's a great part. You see, 30 times 2,400 is a great substantial credit because we're able to take it based on that. And Kendra, this is an income tax credit. Now, here's some things people are going to ask. Can you take COVID ERC and disaster ERC at the same time?
Yes, you can. They're for 2 totally different things.
Can you take COVID ERC and PPP?
As of right now, no.
Can you take,
that could change tomorrow.
Can you take COVID and can you take both ERC? I'm sorry, can you take disaster ERC and PPP?
Yes, you can.
Okay. So the only combination that's kind of on the fence right now is PPP and COVID. And everything else you can do. So that's disaster ERC. And, you know, with this, there's a lot of the country that is able to qualify. In fact, like I said, they just added, and now we're up to a good number of counties, but we're going to scroll it here. Don't worry, you don't have to write this down because, of course, like anything, we're
releasing. This is just so you guys can wrap your heads around the number of areas that are actually affected. When you start talking about counties can seem small. We're talking at over 250 counties across the nation in multiple states.
Yeah.
And this is a huge impact, especially when you're talking about this combined with the other hiring incentives such as ERC and WOTC even that we can bring to the table.
So there's now over 280 counties that are available for disaster ERC.